things as brief as possible. Some of the stuff that I was going to say has been covered, so I don't want to recover stuff. To be honest, I might not use even some of the slides that I put together. But from my side of things, I've worked for one of these umbrella companies that you may or may not like. I've got about 15 years plus experience in the PSC side of things as an accountant and offering these types of services. Currently now work for a company called Ensign, for a broker. We deal with end clients, we deal with accountants, we deal with agencies, and of course contractors, offering different services. Some of those are IR35 based in terms of the audits, reviews, getting them to be kind of engaged with the changes from 2017 and now for the changes 2020. And also looking to talk to contractors and the agencies to understand what they can't do, because to be honest, after the changes in 2017, these blanket assessments just happened left, right and centre. You mentioned TfL earlier. That was one of my specific clients at an umbrella company, and yeah, every single contractor was unhappy. I think is the only way that I'll say it now. And they didn't get a choice. Overnight, just changed, and their pay dropped, to answer your question, by about 20% on their net return. They're in limited companies. The average for, I'll say, a decent rate without being obtuse or insulting, you're looking at about 70% returns, thereabouts, depending on how good or bad your accountant is, depending if you've got your wife, your partner, or whatever else on the company as well. And then your employment, you're looking at about 55 to 60% returns, thereabouts. So you're seriously affected by these sorts of things, which runs in line with the employment, the employer's national insurance. Obviously, the other thing you don't get on dividend is the employee's national insurance either. So you've got the double whammy of both, which is coupled together about 25%. But with a few tax reliefs, it works out about 20 generally overall. So not nice stuff. So from my side of things, again, lots of the stuff on my slides were going to be, what we do, how we can help, and those sorts of things. Common thoughts from April 2017. But they have been spoken about, so I don't want to bore you, and if food's coming out, I'll keep things a little bit more brief. But there are a few things you can do, and that isn't just going into an umbrella company, because lots of people won't want to do that. Not many people are going to want to drop their pay and get around those sorts of things with contracts. The tricky situations are going to be dovetailing your contracts to your working practices. So there's other ways of thinking, and that is, can I be employed but not lose all of the money that I'm currently earning? Or can I continue to use my limited company but almost make that a nominee of something else that again will employ me, so I can still have my company because I like it. I like being a director. That status is something I've enjoyed, and my name and my company is out there and it's well known. So there's a few different things that you can do which aren't aggressive, that don't go with the loan charge that was mentioned earlier, which is something that I would never advise doing. But there are other things out there that you could possibly look at, and this is very individual, person specific, so I can't go into every opportunity, but something that is very popular at the moment, and I do put the little comment at the bottom about a fairly large pharmaceutical company which has had an IR35 issue, which they're now trying to fight. I did go to see them last week, just to talk about some of the issues that they have. I wasn't seeing the directors and their legal team specifically, but their hiring managers, some of their senior guys there. It's a real problem for them. And this solution they're now looking into from a compliance side of things, so they've brought in their own legals and they're reviewing it. So I mentioned it to Tom and to Andy earlier, and they're very interested. And there's a few other automotive companies, one you mentioned earlier, again we're engaging with to try and roll this out as a general. This service actually works. It's compliant, it's not aggressive. It doesn't allow HMRC to go, ooh, I don't like that. They probably won't, because they won't get the same tax that they want to get from PAYE. So there is a solution, essentially. BPO is a title that's been out there for a while. It means business process outsourcing. We've used the word cooperative because there is a share scheme behind it. It is not a service that I personally own. Much cleverer people than I have put this together. Got all the opinions and all the legal sides of things. Putting it into a very brief context, essentially you would be an employee hence IR35 no longer applies. You're acting within IR35, so apologies to single out one individual in the room. But you are fully employed. You would therefore get a salary. You would therefore get holiday pay. Yes, it would be from the contract value that you had secured from your agency. Apologies. But it is all in there. You would have to go through a process of engaging with these guys, an interview process, probationary periods, all the standard stuff that you would expect as an employer. However, as the fact that you would be part of a share scheme, it is much more tax efficient. There isn't income tax on shares that are gifted to you, so long as there is zero value on the share to begin with. Yes, there is capital gains tax at the end. Capital gains tax is 0 to 20%, much lower than 13.8% employers' national insurance, plus 12% employees' national insurance, plus at least 20% income tax. It's all sounding a lot better. The general percentages, which are all at the bottom for the other services, through a BPO, would be about 75% as a net return. To an individual, you don't have to put your wife in there, or your husband in there, or your partner, or your daughter, or your son, or anything like that. It's just you get your salary, shares are allocated to you, and you can come out of it with circa 75%. I say circa mainly because some people might want slightly higher salaries, which will bring the percentage down. Some people might want to be standard PAYE and have the 57% there as a general rule based on a £100,000 a year contract. Those sorts of things, are very, very personal, but it is an individual solution. We can also look, very similar to I imagine Tom can look at your contracts as well, and we can talk to your clients directly with your permission and see if we can do an assessment for them and actually say, this is our opinion. We've got quite a lot of experience in this. We do advise for the BBC, for KPMG, EY, for the people that actually back off Ensign as ECC tax. So they've got quite a lot of good reputation to fall back on to say, we do this stuff already, this is what our bread and butter is. So if you needed help from that side of things, we can help too. So yeah, that's kind of where I was going to leave it just for now. I'll open it up to questions, and I've got quite a few blank faces that are going, I don't quite understand. But I've tried to keep it as brief as possible whilst giving you quite a bit of information without going over ground for a potentially third time, which I seriously don't want to do because I'm not a lawyer and I haven't lived and breathed this stuff against the government, should we say, like Andy has. So I'm in over my head with that. Yeah.
Just a quick one. So you mentioned the pharmaceutical coming up, but that's GlaxoSmithKline line. They've just been pulled in 1,000 people.
1,500, yeah, absolutely.
1,500, that is, yeah. So they all got written. So what happens? Where do they stack? You're talking about 1,500 people. They all work on specific skill set.
Yeah, absolutely.
They're supposed to just go permanent, or?
Well, GlaxoSmithKline have actually officially said today, potentially yesterday, that they're going to fight it. They're going to put a formal response together and go back to them, because let's be honest, if they didn't do anything, which contractor would then want to go and work for them? Let's be honest. And from exactly what you just said, I'm of the opinion, and you may differ, you may not, that actually there is a certain population of contractor that is acting outside that should be inside. And that's what this legislation should be attacking. It's doing it very badly, and that's just HMRC. They do everything very badly when it comes to contractor tax. But it is essentially, GlaxoSmithKline would be well versed to go, we'll assess every single individual and we'll give our opinion of what they should or shouldn't be. At the moment, it is the individual's responsibility. There's no question about that. So again, if I was one of those contractors, I'd be going, let me get an assessment for myself. Let's go through the assess tool. I agree, it's terrible, and it is very, very biased, and that's been proven time and time again in case law as well. But it would be getting those things in your armoury to say, look, this is my contract, this is my working practices, this is the opinion that I have based on where I am. GlaxoSmithKline agrees with me, hopefully. However, their opinion doesn't really matter right now. And then should HMRC have that from 1,500 people, they're not going to want to fight it. They might just pick one or two very highly paid people as a kind of landmark case, is what they would be trying to do, I'd imagine. But I think it's more, they've made their status well known that actually they're going to go after the big people. They're not scared to issue letters for whatever reason.
So let's explain how your solution would help, say, GSA, for
So
example.
the solution helps in the simple fact that most, say, based on those figures, most PSCs, you're getting about 70 grand back in your pocket. That is you as an employee of your own company. You'll be taking dividends, you'll be with your expenses, and of course your small salary, no doubt. It takes you completely out of your company. It employs you with the BPO. You'll be getting 25% salary thereabouts, so you've got a slightly higher salary than you potentially used to. Make sure your stamp duty and those sorts of things are paid, that you're on HMRC's radar. Actually, you've moved from one place to another. So yes, they're getting some of their money instantly, so they're reasonably happy there. And then on a weekly or monthly basis, depending on how often you would normally, say, invoice or get money from your agency, your end clients, or whatever the engagement may be, that money would go into the BPO, very similar to what you might consider an umbrella company. And then that money would be paid out of salary for a portion of it, and then there would be an advance for the share value for the other portion of it. Now, at the end of the year, any shares that you had acquired and gifted would be sold, and of course any advance paid would be cancelled off by the shares that you've sold at that point. A self-assessment tax return would need to be completed, again, by the BPO, all covered already, and any capital gains tax owed on those value of shares payable.
So your take-home pay is still 75%?
Absolutely. After everything's considered, that would be your take-home.
So that's actually 5% higher than what the GSA would be outside of our state.
Absolutely. This model is, broadly speaking, based on how a lot of the banks work for their board level individuals. Some would call it a JSOC in that arrangement. Lots of companies have EMI schemes as well, to again, broadly speaking, version of these. John Lewis, Waitrose, again, share schemes that are very commonly known about, but just not in detail. Use exactly the same measures, compliance and all those sorts of things to allow their guys to profit from the company growing, which is the whole point of the BPO, but also to be marginally more tax efficient as well.
Is there a threshold though to know that above, below which maybe this is not worth?
About 35.
75K.
Pretty low. Absolutely. Below 35, it's just not really worth the hassle of moving out of BAYE. That's the simple. It still works below there, but it's just, honestly, no point.
So I'm just looking at the percentages there of PAYE and stuff. Part of my business model is I stretch my money across in between contracts. Is that going to be a possibility?
Depend, when you have your limited company, I imagine you leave some profit in there, you mean, and stretch it across tax years, or?
Yeah, I'm just wondering how I stretch money, otherwise I'm going to be chasing HMRC because it takes 18 months to claim back from HMRC if you overpay tax.
Okay, so you generally wouldn't overpay, let's say, or at least not too much, but for the simple fact that your salary is still quite low. So take this example, salary would be about 25,000, tax payable on that about 5 potentially. So the maximum you could overpay is 5, depending on what your situation is, but it's unlikely that you'll be overpaying. But because you'd be being paid 75%, let's say, you'd have that in your own account. So if you had then a downtime of 3 months where you weren't contracting, it would be up to you what to do with your money that you'd already been paid, because the money you have, you know you can spend. Okay. There's no, I have a business account which I need to leave my VAT in, my corporation tax, my personal dividend tax and all those sorts of things. You haven't got that worry. Basically every bit of money that you have, you can spend.
How would that potentially work if you still need to maintain your limited company for other business?
Okay. So from that side of things, very simple still. As long as your client, and let's be honest, they're the ones in the driving seat with all of this. If they are dead against you having a limited company and they're going to catch you inside, again, we can have a conversation with them. Your company would be a nominee of the BPO, which basically means the money just flows through your company for that particular assignment, which is what the important factor is there. You would need to leave, a marginal amount of money in the limited company to make it all stack up. Why is the company there in the first place? Very much like an agency, you need to put a percent in there.
Yeah, it's more like, so I've got
And then you use the
contracting
BPO
clients, but
off
I've
the
also
back.
got other
Yeah, but for that individual
completely
one,
outside of contracting.
you would then have the BP off the back. So all of your other incomes would still use your limited company in exactly the same way that you currently do. And you then have this 2-3% of your contracted assignment that you'd found for the BPO company. And you could go to them and say, look, I'm using this outsourcing company. My limited company is there just as a nominee. You can have relevant contracts in place to confirm that actually it is just a nominee company. I'm not an employee of that company at all, and therefore please pay me gross, because IR35 should not be deemed on the entity itself, it should be on me personally, and I am actually employed, but these guys employ me, and therefore all the work is being outsourced. So we can have those technical conversations with the hiring manager or their legal team, or whatever it may be. Plus, if you are a landlord or you do multiple assignments all over the place and it's just one problematic client, let's say, that one assignment would go through BPO, all the other ones would stay in your limited company. And we could either be the accountant to aid you with those books, or you could maintain your current accountant. We don't mind either way.
So if you choose an inside contract,
Yeah.
You have to have a word or some sort of agreement with the employer in order to be able to.
You would have, you'd have an employment contract, absolutely. And then the BPO would have a contract with your agency or your end client or whatever the next engaging party was. So yeah,
they have to have a contract with the employer as well.
Of course. So you'd want that for protection to yourself. So yeah, everything has to. If you engage with an umbrella company, you'd want an employment contract. Then that umbrella company would have a contract with your agency. What I would suggest, and by all means shoot me down if it's not a good suggestion, we can contact you all on an individual basis. My colleague Ricky is there. Give you the weekend to think about it. I know it's Thursday and therefore Friday tomorrow, but rather than doing it tomorrow, that's a little bit soon, we can give you each a call independently and go through your own situations. Talk through a few more questions that you may have thought about, you may have spoken to each other on those sorts of things. Tax is, as you said, quite a boring subject, but it is very important, and money is very emotive as well. So what we're not here to do is go, you must use this, because that's not the right thing for everyone. However, what we can do is go, we've got 5 or 6 different options that you may be using, you may not like, however they are options and they are available to you. But for certain individuals in this room, one option may not be as good as another. And what we can do is just talk you through the different options that are available, but also good for you as an individual, plus give you a few illustrations specifically on your contract values, how you work and those sorts of things. But we can do that from Monday onwards next week. We can either grab your details from Hubadoo, or you can leave them with ourselves. Obviously, if you don't want your details to be passed, let the guys know from that side of things. Because obviously you don't want to be doing any GDPR issues and those sorts of things, but by all means do shout, and we can do it that way around. If you're all happy, by all means show of hands if you're not happy, or just go to the guys at Hubadoo direct and go, absolutely not, don't give them the details. Okay? To say lots of individual questions. I don't mind answering questions, but I'm conscious of time.
We'll have a better idea on the 7th of April.
Pardon?
So we'll have a better idea on the 7th of April.
Nice. Absolutely. The good thing about this is you can keep your company and have that unchanged, and therefore if you start engaging this way, you either don't have to or you don't like it, you can go back to just your company. I'm speaking with a lot of accountancy firms. I spoke to one earlier today in the Heathrow area. He's got 800 guys like yourself that are primarily in the medical arena and that are in the private sector still. That he's just going, I'm going to lose these clients. What do I do with them? I can't advise them legally to do anything apart from PSC, because that's the restrictions I'm under as an accountant. Therefore, he needs a third party to go, these are the available options. So that's what we do for those guys. And we speak to lots of different big accounting firms, well, say SME accounting firms, to go, what do you do? How do you manage your candidate population without losing your entire business? And this is a single way, and this is what he's going to be choosing as well. He's gone through all the compliance already, he's happy, it's robust. He is a chartered accountant and he's been doing it for too many years for me to embarrass him with.
Thanks,
Very
Charlie.
much.
Thank you for coming. We've got some food and snacks right there at the back. There's some drinks over there. So, I mean, the guys are here for a bit, so if you've got any questions, just mingle with them. Any questions for us, let us know. And if you're not part of the Hubbard community, feel free to sign up.
Yeah, MC.
Sign up.